Imagine waking up to the news that silver, the often overlooked precious metal, is poised to hit an unprecedented $2,000 per ounce. It sounds unbelievable, right? But according to expert Willem Middelkoop, this could become a reality as the collapse of the US dollar seems more certain than ever. Stay tuned as we dive deep into how this monumental rise in silver prices is not just possible, but imminent. This is the financial revelation you can't afford to miss.
Have a lag on development of the gold price. So it's not too strange that silver will be breaking out a few months after we've seen a gold breakout out of the gold price. And you're right. Once this rally starts in silver, it often ends up going much higher than the rally you see in gold from percentage point of view. So silver could easily go up 50%, while a 50% move for gold will be that would be quite something. And especially if you look at the silver shares in previous rallies, like we've seen in 2020, 2016. The silver shares on average jumped between 100, 200 or even over 200% in a relatively short time frame, because there's so much leverage there. And especially now the valuations of silver stocks.
As we delve into the potential for silver to reach astronomical prices, it's essential to understand how this precious metal is traded. Silver, like its more glamorous counterpart gold, is bought and sold globally, making it a key player in financial markets around the world. Investors have two main avenues to invest in silver: physical bullion and paper trading. Physical silver includes bullion bars, coins, and rounds, which can be purchased at the current market price, known as the spot price, and delivered immediately. This form of investment offers the tangible security of owning a physical asset. Popular silver coins, such as the American Silver Eagle and the Canadian Silver Maple Leaf, are recognized for their purity and liquidity. On the other hand, paper trading involves silver futures contracts and exchange-traded funds, ETFs. Silver futures are standardized contracts traded on exchanges like the CONEX division of the New York Mercantile Exchange, NYNEX. These contracts obligate the buyer to purchase and the seller to deliver a specific quantity of silver at a predetermined price on a set future date. Futures trading offers investors significant flexibility and leverage, allowing them to benefit from price movements without the need to store the physical metal. Silver ETFs provide another popular method for investing in silver without owning the physical metal. These funds trade on stock exchanges and track the price of silver. Some ETFs focus solely on physical silver bullion, holding large quantities of the metal in vaults. Others might focus on silver futures contracts or invest in stocks of companies involved in silver mining and production. Investing in ETFs allows for easier trading and liquidity compared to physical silver. Silver trading takes place around the clock on major global markets, including New York, London, and Hong Kong. New York, particularly the CONEX, is known for its futures trading and plays a crucial role in setting benchmark prices for silver through its highly liquid market. London, with the London Bullion Market Association, LBMA, is considered the center of physical silver trade, setting the standard for silver pricing through its daily auction process. Hong Kong also serves as a major trading hub in Asia, facilitating both physical and paper silver trading to meet significant demand from Asian investors. Understanding the supply and demand dynamics of silver is key to grasping its price movements. Silver is unique because it has dual demand, as an industrial metal and as an investment. It is used extensively in various industries, including electronics, solar panels, medicine, and automotive manufacturing. This industrial demand is driven by silver's excellent electrical conductivity and antibacterial properties. On the investment side, silver is sought after as a store of value and a hedge against economic uncertainty and inflation. Investors buy physical silver, trade futures, or invest in silver ETFs to diversify their portfolios and protect against market volatility. Silver's price history has been marked by significant volatility. The highest price recorded was $48.70 per ounce on January 18, 1980, driven by the Hunt brothers' attempt to corner the silver market. However, after their scheme collapsed, prices plummeted. In recent history, silver saw another peak at $47.94 in April 2011, driven by strong investment demand in the aftermath of the 2008 financial crisis. Recently, silver prices have shown upward momentum due to economic uncertainty, geopolitical tensions, and increasing industrial demand. For instance, silver breached the $30 per ounce level in early 2021 and showed resilience in maintaining higher price levels, reflecting its growing appeal as both an industrial and investment metal. Understanding these trading mechanisms and market dynamics is crucial as they play a significant role in the day-to-day and long-term price movements of silver. With this foundation, we can better appreciate the factors driving silver's potential rise to $2,000 per ounce amid the looming collapse of the US dollar. This comprehensive view of how silver is traded and valued sets the stage for exploring why expert Willem Middelkoop believes such an unprecedented price surge is possible.
Have been bottoming out and have just started a revaluation process to the upside, while tech stocks and the broader market is in the process of topping out and could see more serious corrections, but that could take years as well to play out. So I don't expect a crash in the very near term.
Well, let's hone in on gold here. If the scenario you described plays out over the course of, let's say, the next decade or so, the US dollar loses its reserve currency status. We see the BRICS nations start to transact maybe with a gold-backed currency, commodities-backed currency, or we see gold in some form or another reintroduced into the global monetary system. Does that mean at the moment gold is still quite undervalued relative to what the potential price that it could be as we look forward into the future?
Yeah, the price of gold always follows the amount of, liquidity in the system, the amount of money in circulation, the amount of debt. Based on this ratio, gold could go much higher. And in a official, more formal gold revaluation plan where gold is being reintroduced into the system, you could expect gold being revalued even north of $10,000 per ounce. I think currently we're in a revaluation process where market forces bring the gold price up. Today we're reaching 2,400 again. I wouldn't be surprised to see $3,000 gold within the next 12 months. Even Citigroup has published their prediction towards that target, I think earlier this week. And silver is especially of interest because silver is still trading almost 50% below its 1980 and 2011 top of $50. So there's so much catching up to do for silver. And we run the Commodity Discovery Fund, and we are adding to our silver positions quite massively in the last few weeks because we see many indicators that silver could have a big run. And if you look at the volume indicators, the volume of trading in the SIL and SILJ, you see a very strong jump in the volume, even much more than in the...
Silver has had a tumultuous history, with prices fluctuating significantly over the years. To understand the potential for silver to reach unprecedented heights, it's essential to look at its historical price movements and the underlying factors that drove these changes. In January 1980, silver prices soared to an all-time high of $48.70 per ounce. This surge was largely due to the actions of the Hunt brothers, two wealthy traders who attempted to corner the silver market by purchasing massive amounts of physical silver and silver futures. Their manipulation drove prices up sharply, but their scheme ultimately collapsed when they failed to meet a margin call, causing prices to plummet back down to $11 per ounce. This event highlighted silver's volatility and the impact of speculative activities on its price. The next significant peak occurred in April 2011, when silver reached $47.94 per ounce. This rise was driven by strong investment demand in the aftermath of the 2008 financial crisis. Investors flocked to silver as a safe haven asset amidst economic uncertainty, pushing its price to near record levels. However, this peak was short-lived, as prices fell in the subsequent years. More recently, the COVID-19 pandemic and ensuing economic uncertainty spurred another surge in silver prices. In mid-2020, silver breached the $26 level and briefly tested $30 per ounce. The pandemic highlighted silver's appeal as a hedge against economic instability, with both investment and industrial demand playing significant roles in driving prices up. Despite these peaks, silver has struggled to maintain high prices over the long term. Its volatility is influenced by a combination of supply and demand dynamics and market speculation. Silver's dual role as both an industrial metal and an investment asset adds complexity to its price movements. Industrial demand remains robust due to silver's applications in electronics, solar panels, medicine, and automotive manufacturing. However, investment demand fluctuates based on economic conditions and investor sentiment. Currently, silver is experiencing upward momentum, driven by a mix of factors including safe haven demand amidst geopolitical tensions and economic uncertainties. In the spring of 2023, silver prices surged by 30%, briefly rising above $26 per ounce before stabilizing around $23. This upward trend reflects growing investor interest in silver as a hedge against inflation and a store of value. Understanding these historical price movements provides valuable context for Willem Middelkoop's prediction that silver could reach $2,000 per ounce. The factors that drove previous peaks, market speculation, economic crisis, and industrial demand, are still relevant today. As the US dollar faces potential decline due to national debt and global de-dollarization efforts, silver's appeal as a safe haven asset could drive prices to new heights. By examining silver's historical price trends and the dynamics that influence its value, we can appreciate the potential for another significant surge. With the dollar's collapse appearing more certain, silver stands poised to benefit from increased demand and investor interest, setting the stage for unprecedented price levels.
As we speak, we see a breakout for gold and silver of the last correction in the last few days. So I think this was only a temporary correction. We might see a next leg up for the precious metals, and as said, there's still so much value in the listed mining companies who have these gold and silver projects.
And so when it comes to the silver miners, what do you look for there? Because finding a pure play silver miner is obviously much more difficult. Gold, you can kind of take your pick. There's a huge amount of stocks to choose from. So how do you find and evaluate silver stocks?
It's very hard. Actually, we gave up. So we just buy the SILJ. In our portfolio, we only have a very few individual silver names, IR Silver being the best. We concentrate on the best discoveries, the tier 1, tier 2 discoveries worldwide, metal agnostic. So in silver, we only invested in the very few silver discoveries which are over 100 million ounce of silver in their first resource estimate. IR Silver just published their resource estimate is over 300 million ounce of silver discovered in Morocco, a great country to be mining, cheap country to be mining. So that's our largest position. We have a position Abra Silver. That's quite a good discovery as well, but that's in Argentina. But most of our investments in the silver space is just the ETFs, because we know from experience, once silver starts to reevaluate higher, the whole basket goes up, and even the worst companies in this space will go up most because they came down so much.
The current silver market dynamics are influenced by a combination of economic uncertainties, geopolitical events, and industrial demand, creating a perfect storm for potential price surges. As we examine these factors, we can see why silver is gaining renewed attention and why experts like Willem Middelkoop believe it could reach unprecedented heights. In recent months, silver prices have shown significant upward momentum. Economic uncertainty driven by high inflation rates, fluctuating interest rates, and geopolitical tensions has heightened silver's appeal as a safe haven asset. Investors are increasingly turning to silver to hedge against market volatility and economic instability. This is similar to previous periods of economic crisis, such as the 2008 financial meltdown, when silver prices surged due to increased investment demand. Geopolitical events also play a crucial role in silver's price dynamics. Tensions in the Middle East, particularly the ongoing conflicts and political instability, have led to increased demand for safe haven assets. Similarly, the Russia-Ukraine conflict and its impact on global markets have driven investors to seek refuge in precious metals like silver. These geopolitical risks create an environment of uncertainty, which typically benefits silver prices. Industrial demand is another significant factor driving silver's current market dynamics. Silver is an essential component in various high-tech industries, including electronics, solar energy, and automotive manufacturing. Its excellent electrical conductivity and antibacterial properties make it indispensable in producing solar panels, electric vehicles, and medical devices. As the world shifts towards green energy solutions and advanced technologies, the industrial demand for silver is expected to rise, further supporting its price. Recent market data underscores these dynamics. For example, in the spring of 2023, silver prices surged by 30%, briefly rising above $26 per ounce before stabilizing around $23. This increase was driven by safe haven demand due to the Israel-Hamas war and fears of prolonged high interest rates. Although silver prices fell back slightly, the overall trend remains positive, reflecting the metal's growing appeal amid global uncertainties. Moreover, the ongoing de-dollarization efforts by several countries are contributing to silver's bullish outlook. Nations like China, Russia, and members of the BRICS alliance are reducing their reliance on the US dollar and increasing their reserves of alternative assets, including gold and silver. This shift is a response to the declining faith in the US dollar, fueled by the enormous US national debt and the country's monetary policies. As these countries move away from the dollar, the demand for silver as a store of value and a hedge against currency devaluation is likely to increase. The interplay of these factors, economic uncertainty, geopolitical tensions, and rising industrial demand, creates a favorable environment for silver prices. With the dollar's collapse appearing more certain, silver is poised to benefit from increased demand from both investors and industries. This sets the stage for the potential price surge to $2,000 per ounce, as predicted by experts like Willem Middelkoop. Understanding these current market dynamics is crucial for appreciating silver's potential. As the global economic landscape continues to evolve, silver's role as a safe haven asset and an essential industrial material positions it for significant gains. The combination of these factors supports the view that silver could experience a record-breaking week, reaching new highs in the face of the dollar's decline.
It's very hard for the Federal Reserve to do the right thing now. And I think the Federal Reserve is just waiting to see what breaks first. And once markets or parts of the system are starting to break down, they will react and start lowering interest rates. But I agree, given the latest inflation numbers, they still have to wait. But the economy is not very strong. The official numbers might look good, but there's so much in the economy which is not going well, especially in commercial real estate, credit card debts, car loans. And I expect things to start breaking down within the next 6 to 12 months. And this autumn, winter might become a bit more difficult. And that would explain a more broader correction as well. And then the Fed will need to come and step in again. And don't forget that there's another huge problem about financing the budget deficits in the US. And there are not enough willing buyers anymore out there for the treasuries. So the markets needs to be supported in a big way. And we're talking trillions and trillions. And that will all play out in the next 12 to 18 months. So expect more QE to arrive pretty soon.
The potential collapse of the US dollar is a critical factor driving the renewed interest in silver and its potential for significant price increases. To understand this dynamic, it's important to examine the underlying issues contributing to the dollar's decline and how this impacts silver. The US dollar has long been the world's dominant reserve currency, but this status is increasingly under threat. One of the primary reasons is the ballooning US national debt, which has surpassed $30 trillion. This massive debt level is unsustainable and raises concerns about the long-term stability of the dollar. As the US government continues to borrow heavily and run large budget deficits, the value of the dollar is eroding, causing investors to seek alternative stores of value. Global de-dollarization efforts further exacerbate the dollar's vulnerability. Countries like China and Russia are actively reducing their holdings of US dollars and increasing their reserves of other currencies and precious metals. For example, Russia has moved significant portions of its reserves into euros, yuan, and gold, while China has similarly diversified its foreign exchange reserves. These moves reflect a growing distrust in the dollar and a strategic shift towards more stable and diversified reserves. Moreover, geopolitical tensions are accelerating this de-dollarization trend. The U.S. reliance on economic sanctions as a foreign policy tool has prompted affected countries to find ways to circumvent the dollar-based financial system. By building up reserves of alternative assets, these countries reduce their exposure to U.S. financial leverage and enhance their economic independence. The decline of the dollar is also driven by monetary policy decisions. The Federal Reserve's prolonged period of low interest rates and extensive quantitative easing programs have flooded the market with dollars, contributing to inflationary pressures. As inflation erodes the purchasing power of the dollar, investors are increasingly looking to precious metals like silver as a hedge against this devaluation. In this context, silver stands out as an attractive investment. Unlike fiat currencies, silver is a finite resource with intrinsic value. Its historical role as a store of value and medium of exchange makes it a reliable hedge against currency risk. Furthermore, silver's dual demand as both an industrial metal and an investment asset adds to its appeal. The ongoing industrial demand for silver in sectors like electronics, solar energy, and automotive manufacturing provides a strong foundation for its price. Investors are already responding to these dynamics. The spring of 2023 saw a notable surge in silver prices, driven by a combination of safe haven demand and industrial use. This trend is expected to continue as the economic and geopolitical landscape remains uncertain. As countries diversify away from the dollar and seek stable assets, silver's demand is likely to increase, supporting higher prices. Willem Middelkoop's prediction that silver could reach $2,000 per ounce may seem bold, but it is grounded in these fundamental economic shifts. The potential collapse of the US dollar creates a scenario where silver, with its unique properties and historical significance, becomes a crucial asset for preserving wealth. As the dollar's decline becomes more apparent, silver's role as a safe haven asset will likely drive its price to new heights. By understanding the factors contributing to the dollar's decline and the corresponding rise in silver demand, we can appreciate the plausibility of such a significant price increase. The interplay of these economic forces sets the stage for a potential record-breaking week for silver, as it emerges as a key asset in the face of growing economic uncertainty.
In a few of those interviews, I already mentioned that we are entering a World War III type of conflict, but it will be a whole different type of conflict compared to the First and the Second World War. This is much more a hybrid situation. And in 2013, I wrote The Big Reset, and The Big Reset has this thesis that we're in a financial endgame for the current dollar system. Every 80 to 90 years, we experience a big change in the financial system, in the geopolitical situation, in which we get a new leader, new leader in the world. Now we're in the dollar system. The dollar system started in 1944 with Bretton Woods. Before that, we had the pound sterling as our world reserve currency, and we had the British Empire. And now, of course, we have China becoming so powerful that the US becomes a little frightened. And you have this huge conflict where the Western alliance, you could say, so the US and the Western friends, including Australia and Japan and South Korea, are confronted by a huge bloc coming from the East. It's the BRICS bloc, the BRICS countries, but the BRICS cooperation is getting much larger now. You have so many new countries willing to join the BRICS bloc, and for me, World War III is like the confrontation between this Western US bloc, dollar-based, dollar-centered bloc, and the Eastern BRICS bloc, which is working on their own currency, which is working on their own financial system, which is working on their own trading system. And for us as commodity investors, and that's why I spent so much time researching this and thinking about this, I think commodities, and especially gold and silver, will be part of the new system coming from the East. And Zoltan Pozsar, who's this brilliant analyst who was with Credit Suisse, well, Credit Suisse is not there anymore. There's a great example of what happens in a reset. You know, the banks like Credit Suisse fail. And Zoltan Pozsau wrote 2 years ago,
The prediction that silver prices could soar to $2,000 per ounce amid a collapsing US dollar is not just speculation. It is rooted in a complex interplay of global economic shifts, investment strategies, and industrial demand. To fully grasp the potential for such a dramatic rise, we need to consider expert insights and how these economic forces are converging. Willem Middelkoop, a renowned expert in economics and financial markets, has highlighted several factors that underpin his bold prediction. Middelkoop emphasizes that the dollar's decline is accelerating due to unsustainable national debt levels, extensive quantitative easing, and increasing inflation. As these issues intensify, the stability of the dollar is jeopardized, prompting investors to seek refuge in more stable assets like silver. One key aspect of Middelkoop's analysis is the historical context of silver prices. He points out that silver has shown remarkable resilience and potential for sharp increases during periods of economic instability. For instance, the 1980s saw silver reach unprecedented highs due to market speculation, while the aftermath of the 2008 financial crisis saw another significant surge. These historical precedents suggest that silver is capable of substantial price movements in response to economic crises. Additionally, Middelkoop underscores the ongoing global de-dollarization efforts. Countries like China, Russia, and members of the BRICS alliance are actively reducing their reliance on the US dollar and increasing their reserves of gold and silver. This strategic shift is driven by a desire to mitigate exposure to U.S. economic policies and sanctions. As these countries continue to build their reserves of precious metals, the demand for silver is expected to rise, supporting higher prices. Moreover, Middelkoop highlights the dual role of silver as both an industrial metal and an investment asset. Silver's unique properties make it indispensable in various high-tech industries, including electronics, solar energy, and automotive manufacturing. The growing demand for green energy solutions, particularly solar panels, is expected to drive industrial demand for silver even higher. This industrial demand provides a strong foundation for silver prices, supplementing the investment demand driven by economic uncertainty. Middelkoop also points to the increasing interest in silver as a hedge against inflation. As central banks continue to implement policies that devalue fiat currencies, precious metals like silver offer a reliable store of value. Investors are turning to silver to preserve their wealth in an environment of rising inflation and declining confidence in paper currencies. These factors create a compelling case for why silver could see a dramatic price increase. The combination of historical price movements, global de-dollarization efforts, industrial demand, and investor interest forms a robust foundation for silver's potential rise. As the dollar's decline becomes more apparent, the shift towards silver as a safe haven asset is likely to gain momentum. Understanding Middelkoop's insights helps us appreciate the plausibility of silver reaching $2,000 per ounce. The convergence of these economic forces sets the stage for a significant price surge. By examining these expert predictions and the underlying factors, we can better understand how silver is poised to benefit from the dollar's decline, and why such a dramatic increase in price is within the realm of possibility. Willem Middelkoop's prediction that silver could reach $2,000 per ounce may seem bold, but it is grounded in these fundamental economic shifts. The potential collapse of the US dollar creates a scenario where silver, with its unique properties and historical significance, becomes a crucial asset for preserving wealth. As the dollar's decline becomes more apparent, silver's role as a safe haven asset will likely drive its price to new heights. By understanding the factors contributing to the dollar's decline and the corresponding rise in silver demand, we can appreciate the plausibility of such a significant price increase. The interplay of these economic forces sets the stage for a potential record-breaking week for silver, as it emerges as a key asset in the face of growing economic uncertainty.
Could analyze those charts by pointing to, let's say, Elliott wave count, that we're in the fifth. We're trying to set a top in the fifth wave, which is the end of a very long bull market. Actually, the bull market for the Dow Jones started in 1942 at the depth of the Second World War, when the Dow Jones was trading at 100. And it shows, markets bottom not after a war, but in a war. And then we've had this incredible rise for the Dow Jones to 30,000, over 30,000. And now we could say that there's a major top developing in Western equity markets. But since we have so much debasement of currencies and with so much money printing, I wouldn't be surprised that stocks could go even higher, not because everything goes well in the economy, but look what happened to Venezuela, the stock exchange there, and look what happened to the Zimbabwean stock exchange. They set all new records because of hyperinflation and debasement of currency. So we saw the same during the Weimar Germany years in the 1920s. But I agree, the stock market, the broader stock market, seems to be topping out. Also, if you look at valuations and other indicators. So I wouldn't be surprised to see the start of a long and strong correction over the next few years, and that could actually start in the second half this year. Maybe we set the top already, but a process of bottoming and topping after such a long move will also take many months and many quarters and maybe longer. But the risk on the downside are becoming more apparent, and I think the commodity space is totally different. Commodity stocks do poorly when tech stocks do well. We've seen that at the late 1990s as well. So I think commodity stocks.
The global economic landscape is undergoing significant shifts that are affecting various asset classes, including precious metals like silver. As nations move away from the US dollar and the demand for industrial metals increases, silver is uniquely positioned to benefit from these trends. One of the key drivers of silver's potential price surge is the global de-dollarization effort. Nations are actively reducing their reliance on the US dollar in response to its declining value and the US extensive national debt. Countries like China and Russia, as well as other members of the BRICS alliance, are diversifying their reserves by increasing their holdings of precious metals, including silver. This strategic move is a hedge against the volatility and potential collapse of the US dollar. As more countries follow this path, the demand for silver as a stable reserve asset is expected to grow significantly. In addition to its role as a reserve asset, silver's industrial applications are expanding. The metal is essential in numerous high-tech and green energy industries. Its superior electrical conductivity makes it a critical component in electronics, solar panels, and electric vehicles. As the world transitions towards renewable energy sources, the demand for silver in solar panel production is particularly noteworthy. Solar energy projects worldwide are ramping up, and silver's use in photovoltaic cells is crucial for harnessing solar power. This industrial demand adds a robust and consistent element to silver's market dynamics, supporting its price. Furthermore, the geopolitical tensions and economic uncertainties of recent times have heightened silver's appeal as a safe haven asset. Historically, during periods of economic turmoil and geopolitical strife, investors flock to precious metals to protect their wealth. The ongoing conflicts, trade tensions, and economic sanctions contribute to a climate of uncertainty, driving investors to seek the stability offered by silver. This flight to safety is reminiscent of past financial crises, where silver and gold prices surged as investors sought to hedge against market volatility. Moreover, the U.S. Federal Reserve's monetary policies, including prolonged low interest rates and quantitative easing, have led to increased inflationary pressures. As the value of the US dollar erodes, silver's intrinsic value as a finite resource becomes more attractive. Unlike fiat currencies, silver cannot be printed or artificially inflated, making it a reliable store of value. Investors are increasingly turning to silver to preserve their purchasing power in an inflationary environment. These converging factors create a compelling case for silver's potential price increase. The de-dollarization efforts, rising industrial demand, geopolitical uncertainties, and inflationary pressures all point towards a favorable environment for silver. Willem Middelkoop's prediction that silver could reach $2,000 per ounce is grounded in these robust market dynamics. As the economic landscape continues to evolve, silver's dual role as an industrial metal and an investment asset positions it uniquely for substantial gains. The combination of increasing demand from both industrial applications and investors seeking a safe haven sets the stage for silver's potential record-breaking rise. The dollar's decline and the global shift towards alternative reserve assets highlight silver's importance in the modern financial system, making it a key asset to watch in the coming years.
To the bottoming out in 2015, 16, 17. Build a long position, especially in next-gen energy, who's responsible for the the most valuable new uranium discovery in decades. The company grew from a market cap of 30-40 million when we first invested in it to over 3 billion, I think now. We still maintain our core position, fortunately. If we look at supply and demand for uranium, you're right. We currently have some 400 nuclear reactors in operation worldwide. Another 400 are being planned or built. So you'll see a huge increase of demand, and there are not enough new uranium discoveries, and the prices have been so low that there wasn't any incentive to open any mines. The contrary, many of the producers closed down projects. Some of them are being restarted, some of them can be restarted, but I think uranium prices will stay strong. Uranium will stay in a bull market, and there's more money to be made because it's such a small space. And the quality names, are very few. We have a few of these individual names. And then, of course, we also invest in the U.S.
The global economic shifts and the growing skepticism about the US dollar are creating an environment ripe for significant changes in asset values, particularly for precious metals like silver. One of the most profound changes is the increasing interest in alternative reserve assets, driven by the declining confidence in the dollar. As we move closer to a potential economic reset, silver's strategic importance becomes even more pronounced. Countries around the world are diversifying their reserves to mitigate risks associated with the dollar. This de-dollarization trend is not just about moving away from the dollar, but also about increasing stability and security in national reserves. Silver, with its historical role as a store of value, is emerging as a preferred choice. Unlike fiat currencies, silver's intrinsic value is recognized globally, and its limited supply ensures it cannot be devalued through inflationary policies. The shift towards green energy and advanced technology further bolsters silver's prospects. Silver's superior electrical conductivity and antimicrobial properties make it indispensable in several high-growth sectors. The global push towards renewable energy, particularly solar power, relies heavily on silver for the production of photovoltaic cells. As countries ramp up their renewable energy projects to combat climate change, the demand for silver is expected to surge, providing a strong industrial foundation for its price. In the electronics industry, silver is used extensively in connectors, conductors, and sensitive components of various devices. The rise of the Internet of Things, IoT, 5G technology, and electric vehicles amplifies this demand. Electric vehicles, which are at the forefront of the green transportation revolution, require silver for their electrical systems and batteries. As the adoption of electric vehicles accelerates, so too will the demand for silver. Geopolitical tensions also play a crucial role in shaping market dynamics. The ongoing conflicts and political instability in various parts of the world create uncertainty and drive investors towards safe haven assets. Silver, often considered a safe haven alongside gold, attracts investors looking to hedge against geopolitical risks. This demand for security further supports silver prices in times of global instability. The Federal Reserve's policies have led to significant inflationary pressures, reducing the purchasing power of the dollar. In response, investors are seeking assets that can protect their wealth from inflation. Silver's historical performance as a hedge against inflation makes it an attractive option. As inflation rates rise, the real value of fiat currencies falls, and investors turn to tangible assets like silver to preserve their wealth. Willem Middelkoop's prediction that silver could reach $2,000 per ounce may seem extraordinary, but it is grounded in these fundamental economic and geopolitical trends. The convergence of de-dollarization, industrial demand, geopolitical uncertainty, and inflationary pressures creates a perfect storm for silver. As these factors continue to influence the global economy, silver's role as both an industrial metal and a safe haven asset positions it for substantial gains. The potential collapse of the US dollar adds an additional layer of urgency to this scenario. As countries continue to reduce their dollar holdings and increase their reserves of precious metals, silver stands out as a reliable and valuable asset. The combination of these economic forces sets the stage for a significant rise in silver prices, potentially reaching unprecedented levels. Understanding these dynamics helps us appreciate why silver is poised for a potential record-breaking surge. The interplay of global de-dollarization, increasing industrial demand, geopolitical tensions, and inflationary pressures supports the view that silver could see dramatic price increases. As the economic landscape evolves, silver's unique properties and strategic importance make it a key asset to watch, potentially leading to a historic price rise in the face of the dollar's decline.
I think the ECB will be pressured as well, will feel pressured as well to start lowering rates in the next 12 to 18 months, because I think the economy will start to weaken a bit more. Of course, price of oil and copper and many commodities are starting to rise again, so this will increase inflation pressures. I'm afraid that inflation comes in waves, often 3 waves. We've had the first. I think the second wave is starting to materialize. So it will be very interesting to watch how the central bankers are starting to change their policies.
All these economic and geopolitical factors are converging to create a scenario where silver could see a record-breaking rise to $2,000 per ounce. Let's bring this all together to see how this could realistically happen. The potential collapse of the US dollar is perhaps the most significant factor. The dollar's value is under intense pressure due to the ballooning US national debt, extensive quantitative easing, and the resulting inflation. As the dollar continues to weaken, investors are looking for more stable stores of value. Precious metals like silver, which have intrinsic value and limited supply, become increasingly attractive. This shift away from the dollar towards assets like silver is part of a broader de-dollarization trend that is reshaping global financial markets. Countries like China, Russia, and other members of the BRICS alliance are actively diversifying their reserves away from the dollar. This movement is driven by a desire to mitigate the risks associated with holding large amounts of U.S. currency, especially given the U.S. fiscal policies and economic instability. As these nations increase their holdings of silver, the demand for this precious metal rises, pushing prices higher. At the same time, silver's industrial applications are expanding rapidly. The push towards renewable energy, particularly solar power, relies heavily on silver. Solar panels, which convert sunlight into electricity, use silver for their photovoltaic cells. As global initiatives to combat climate change ramp up, the demand for solar panels, and consequently silver, will increase significantly. Additionally, the growing use of silver in electronics and electric vehicles further boosts its industrial demand. Geopolitical tensions are also contributing to the demand for silver. Conflicts in the Middle East, trade tensions, and political instability create uncertainty in global markets. Investors traditionally turn to safe haven assets like silver during such times of instability. This flight to safety supports higher silver prices as investors seek to protect their wealth from geopolitical risks. Moreover, inflationary pressures are eroding the value of fiat currencies. Central banks, including the U.S. Federal Reserve, have implemented policies that have led to significant inflation. As the purchasing power of the dollar decreases, investors look to silver as a hedge against inflation. Silver's historical performance as a store of value during inflationary periods makes it a reliable investment. Willem Middelkoop's prediction that silver could reach $2,000 per ounce is grounded in these robust market dynamics. The convergence of de-dollarization, rising industrial demand, geopolitical uncertainties, and inflationary pressures creates a perfect storm for silver. As these factors continue to influence the global economy, silver's dual role as an industrial metal and a safe haven asset positions it for substantial gains. The current market conditions are already reflecting these trends. Silver prices have shown upward momentum, driven by increased demand and economic uncertainties. The spring of 2023 saw a significant surge in silver prices, highlighting the metal's growing appeal. As the dollar's decline becomes more apparent, the demand for silver is expected to rise further, supporting even higher prices. In conclusion, the interplay of these economic forces sets the stage for silver's potential record-breaking rise to $2,000 per ounce. The dollar's decline, coupled with increasing industrial demand and geopolitical tensions, creates a favorable environment for silver. As investors and nations alike seek to protect their wealth and diversify their reserves, silver's strategic importance is amplified. This comprehensive understanding of the factors driving silver's potential surge underscores the plausibility of such a significant price increase. The stage is set for a historic rise in silver prices, reflecting its critical role in the modern financial landscape.
Resets, monetary resets, which happen every, 80, 90 years, or maybe you could say every 40, 50 years, because in 1971, we took the dollar off the gold standard, and that could be called Bretton Woods 2.0. But these changes only take place once in your lifetime, almost. So and people always expect these changes to come very soon and be very abrupt, like it's binary, it's 0 or it's a 1, but it's more like a process. And now we're in the end game of the current dollar system. So we're in the final inning of the current dollar system. But this doesn't mean that the dollar will collapse within the next 2 to 3 years. But 10 years from now, we'll conclude that the power of the almighty dollar is quite a bit less than it was 10 years ago. So we're very early in the game, which the BRICS club is starting to play. So that's very early. And it will take several years and maybe even a decade before this BRICS alliance will become really powerful, and so powerful that we in the West need to walk and talk their book instead of the US book. And we are here in Europe, and we're somewhere in between the West and the East. Currently, Europe is still firmly in the US bloc, the dollar-centered bloc, but there's so much happening and coming from the East that I think in Europe we'll have to decide whether we will start cooperating with the BRICS countries and stop seeing them as their enemy.